Good day, Junior Tikkies. I'm Mrs. Brimacombe. We're going to look now at the General Ledger Activity 5. Prime Drive Mechanics, which is a service business. You are provided with the information from Prime Drive Mechanics for April 2024. The business is owned by Ronald Goodman. Required, enter the opening balances and totals in the accounts on the 1st of April 2024. Question number 2. Post the cash journals to the General Ledger on 30 April 2024. And the third question, close the accounts at the end of the month on 30 April 2024. Information A. They've given us the balances and totals on the 1st of April, which means this is going to be used to answer question number 1. Information B and C. Take note the different way in which it was asked. Instead of giving you a list of transactions and say, posting it to the cash receipts journal and cash payment journal, and from there, we're going to post it to the general ledger. Now we've given you a summary of the cash receipts journal with money columns, bank, fee income, and then we've got sundry accounts. That total consists out of transaction number 1, 2, and 3. So you need to look at the list of transactions when you're completing the general ledger. Because remember, from the cash journals, if we're posting from sundry accounts, it happens on the day of the transaction and you need to identify, but bank was debited. Why did the business receive money? And then the same applies now with the cash payment journal. They've given you the money columns, bank, wages, consumable stores, and sundry accounts. Sundry accounts consist out of transaction number 1 up to number 5, which means we need to look at those transactions and see on what day did the transaction took place, why did the business make a payment, why was bank credited, because we need to identify which account will be debited. So it is important to take note of that. You're not going to post sundry accounts, that total, sundry accounts, and that total. You need to look at the list of transactions. So starting with the general ledger now, we're going to first, step number 1, write down the opening balances. Step number 2, posting from the cash journals, and then the third step, we're going to close off the accounts. So the first one that we've got is capital. Capital is regarded as an owner's equity account, which means it will minus on the debit and credit plus on the credit side. Think about it in another way, in a different way. Capital, the first letter starts with C, C for credited. So on the credit side, we're going to have balance brought down 300,000. The second account that we need to open is drawings in the balance sheet account. Drawings is regarded as a direct owner's equity account, which means it will always minus on the debit side and plus on the credit side. Another way to think about, to understand where do we take drawings. Drawings starts with D, the letter D, D for debit. And then you've also learned from dead click, which we spoke about many times now. Drawings will always plus on the debit side, which will have a negative effect on the owner's equity. So there are many different ways in understanding that drawings, the balance brought down, will appear on the debit side. Vehicles is regarded as a non-current asset, which will increase on the debit side and decrease on the credit side. This means that the balance brought down will appear on the debit side. You would notice there's only one row, and if you go through the list of transactions, you would see that there's no vehicles involved during the month. So this is the only thing that will appear in vehicles. Then we've got equipment. Equipment is regarded as a non-current asset. Again, it increases on the debit side and decreases on the credit side. So the opening balance will appear on the debit side on the first day of the month. And now we need to go through the list of transactions to see, but what happened during the month? So if we look at the cash receipts journal, there's no money column open for equipment. But sundry accounts consist out of transaction number 1, 2, and 3. And the third transaction said, received a cash refund for 1,390 for defective multimeter returned on 30 April 2024. Now that multimeter is regarded as equipment. Remember what type of business we've got? We've got a service business. This will form part of my equipment. They use it to do a diagnostic on an engine. So it's part of the equipment which they've used. So this means that we've purchased one, but now we've returned that and they've given us a cash refund, which means now we no longer have this equipment. We've received money, therefore bank will be debited and equipment is going to be credited. And then if you go to the cash payment journal, there's no money column open for equipment, but under sundry accounts, transaction number 3, it said bought a spanner set on 27th April 1,800. A spanner set will be used in our business as part of our equipment. So now 2 things happened here. Number 1, equipment was returned. Number 2, equipment was purchased. So to start off with the first transaction from the cash receipts journal, we applied the basics by saying bank will be debited, the rest will be credited from the cash receipts journal. Another thing, if we bought equipment, our assets would increase. If we've returned that, our assets will decrease. And where does it decrease? On the credit side. On which day did the transaction happen? On the 30th. Details bank from which journal? From the cash receipts journal. Remember that your general ledger should always be in date order. In this case, it didn't matter if I started with the cash receipts or the cash payment journal, because the cash payment journal will be in the opposite side. Why? When we purchase equipment, our assets will increase. This means on the 27th, details bank from the CPJ and the total is 1,800. So now we've done step number 1. We've written the opening balance. Step number 2, we've posted from the journals. The third step is to close off the account at the end of the month. To close this off, it means that we need to balance this account. Always check which side of the account is the highest, has the most numbers or the highest numbers, because that's where we need to start adding. So it's clear that the debit side is more than the credit side. So we start to total the debit side, which means the debit side must be equal to the credit side. It means that the difference, 141,800 minus 1,390, equals my balance carried down, which will be my opening balance in the new month. That will be May the 1st, 2024. Next, we've got bank. Bank, it specifically said it has a debit balance, and that is important because if bank has a debit balance, it means that it's regarded as a current asset, which will increase on the debit side and decrease on the credit side. This means that my opening balance will appear on the debit side on the 1st of April 2024. Posting from the journal, step number 2. From the cash receipts journal, your bank will always be debited. And because we're posting from a money column, it means this must happen at the last day or the last day of the month, which is on the 30th. Our total receipts from the cash receipts journal was 275,241. From the CPJ, bank will always be credited. On the credit side, it means on the last day of the month, our total payments, 83,880. So we've done step number 1, we've written down the opening balance. Step number 2, posting from the journals. And the third step, we need to balance this account. To balance this account, it means that we want to see at the end of the month how much money do we have left over in this bank account. What is our balance? In order for us to do this, it means that we need to look, first of all, which side is the greater side. And this is important to always take note of with bank. I can go from a favorable bank balance, having money in my account, to an unfavorable balance where I've got no money in my bank. Now I owe the bank the money. So I went into a bank overdraft. And this happens when your total payment is more, in this case, than our total receipts and the money that we have in our bank balance in the beginning. But if we have a look at this now and we compare the debit to the credit side, it is clear by just looking at the total receipts, it far exceeded the total payments. It means that the debit side is greater than the credit side. So we start to total the debit side and we say that the debit side must be equal to the credit side. And the difference is the balance carried down, which will be my opening balance May the 1st, 2024, the beginning of the next month. And that is how much money I've got left over. Savings account. Savings account is regarded as a current asset, which increases on the debit and decreases on the credit side. That's why the opening balance will appear on the debit side. And now we need to check, was there anything else that happened with our savings account during the month? So we need to go to the cash receipts journal. There is no savings account. And if I go to the list of transactions, there's nothing in the CRJ. If I go to the CPJ, there's no money column open for savings account. But if I go to transaction number 2, it said transfer 10,000 from the business current account to a savings account at Absa Bank on 27 April 2024. This means that we took money out of our current bank account and we've transferred that money into a savings account. This means now from the cash payment journal, bank will always be credited and the rest will be debited. And think about it also. If I put money into my savings account, what's going to happen with my assets? It's going to increase. Where does it increase? On the debit side. On which day did this happen? On the 27th. Details, bank, from the cash payment journal, and how much did we transfer? 10,000. Now that we've done question number 2, step number 2, posting from the journals, we need to close off this account. There is nothing that appears on the credit side, so that's why we can just draw a line and we can add it together. Then we've got loan. Now, loan is regarded as a liability. Take note, there is no opening balance for loan. Just because there's no opening balance doesn't mean that we're not going to post from the journals to the general ledger. So there's no step number 1, opening balance, but there is step number 2, posting from the journals. So we need to check both the CRJ and the CPJ to see if there's any transactions which involved loan. If we go to the CRJ, there's no money column open for CRJ. For loan in our CRJ. But if we go to sundry accounts, it says transaction number 1, a loan was received from Best Bank on the 3rd of April 2024, 180,000. If we go to the general ledger now, posting from the cash receipts journal, our liabilities is going to increase on the credit side. From the CRJ, bank is debited, the rest is credited. That's why it appears on the credit side on which day did the transaction happen. On day 3, details bank from the cash receipts journal 180,000. If we go to the CPJ and we go to transaction number 5, it says 2,000 was paid to Best Bank on 30 April regarding the loan. So we've received money and now we need to pay it back. When a payment is made, bank is credited, the rest is debited. Our liabilities is going to decrease on the debit side because we owe them less money. On what day did the transaction happen? Day 30, details bank from the CPJ and the amount 2,000. So now we can, at the end of this month, the third step, close or balance the account. So that's basically working out how much do we owe the bank at the end of the month. We borrowed 180,000, we paid 2,000, which means that we owe 178,000. So how do we get to that? By balancing the account, again we look at which side is the greater side. It's clear that the credit side is. So we just total 180,000. The credit side must be equal to the debit side minus 2,000 means that our new balance is 178,000. And that is how much we owe the bank. And that will be our opening balance the 1st of May 2024. Fee income. Now we're moving to the nominal account section. And very important, nominal account section means totals brought forward. Fee income, step number 1, is an income. So the total brought forward will appear on the credit side. Now we need to look at step number 2, posting from the journals. From the cash receipts journal, we have fee income, a money column, which means that we're going to post the total 80,861 on the credit side, details bank on which day, the last day of the month. There's no other transactions involved with fee income, which means we draw a line and we just add the credit side. This is our new total. Commission income, nominal account number 2. This is an income minus plus. So on the credit side, we're going to have the total brought forward 43,000. Posting from the cash receipts journal, there's no money column open for commission income, but if you go to transaction number 2, it says 12,990 was received for commission on 14 April 2024. The date is important because when we're posting from sundry accounts, we have to post it on the day on which the transaction took place. So on the credit side, I'm going to have day 14, bank, CRJ, 12,990. There's no other transactions involved. There's nothing on the debit side. So the last step, just total the credit side. Next, we've got wages. Wages is an expense which will increase on the debit side. That means the total brought forward will appear on the debit side, 39,000. In my CPJ, we had a money column open for wages, 24,480, which means posting from the CPJ, bank is credited, the rest is debited. Our expense month, which is the 30th. No other transactions is involved with wages. There's nothing on the credit side. So we just draw a line and we total. This is our new total for wages. Consumable stores is an expense, which means that the total brought forward will appear on the debit side. From the CPJ, there was a money column, consumable stores. Bank will be credited, the rest is debited. On the debit side, on the last day of the month, 6,350. There's nothing else. There's nothing on the credit side. Just draw a line and add those two together. Rent expense. It's regarded as an expense, which means it will increase on the debit side and decrease on the credit side. Therefore, the total brought forward appears on the debit side, 50,000. If we go to the cash payment journal, there's no money column open for rent expense, but under sundry accounts, transaction number 4, we've got paid the monthly rent on 30 April 2024. The rent per annum is 120,000. Now you need to be careful because they provided you with the rent per annum, but you've only paid for the month of April. So there's a calculation involved. To calculate the monthly rent, you have to take 120,000 divided by 12 because there's 12 months in a year, which means the monthly rent is 10,000. On the day of the transaction, which is the 30th, details, bank, CPJ, 10,000. Have we applied the double entry principle? Yes. Bank will be credited if a payment is made. Account debited, rent expense. There's nothing else that happened with the rent, which means that we can take the debit side and we can total it. So my new total for rent is 40,000. Advertising. Advertising is regarded as an expense, plus on the debit, minus on the credit. This means that the opening balance, where's the plus on the debit side, will appear on the debit side. Now we need to look at, was there anything else that happened with advertising during the month? In my cash payment journal, transaction number 1 said 7,800 was paid for advertising on 10 April 2024. Posting from the cash receipts journal, bank is going to be credited, our assets is going to decrease. Therefore, advertising will be debited, our expense is going to increase on the day of the transaction, which is day 10. Details, bank, CPJ, 7,800. Nothing else happened with advertising. There's nothing on the credit side, so we just total the debit side. Then we've got salary. Salary is an expense. The opening balance will therefore appear on the debit side. The total brought forward, 55,000. Remember, balance sheet account section, balances. Nominal account section, salary. So now we're going to have the last transaction, 21,450 was to pay the salary to the employee on 30 April 2024. This means now that my salaries, a payment was made, bank will be credited, salary will be debited on the 30th, details bank, CPJ, and the amount 21,450. There's nothing else that happened with my salaries. Therefore, we can draw a line and we can total and find our new total for salaries. Now we have done all the transactions. There's nothing left over for us to post. It means that we can conclude this activity. We started with all the accounts in the balance sheet account section, which are my owner's equity, assets, and liabilities. Balance sheet account section will always have balances. Then we moved on to the nominal account section. Income will always increase on the credit side. My expenses will always increase on the debit side. Very important. Nominal account section, totals brought forward. These are important pointers to remember. When there's nothing on the credit side, we just draw a line and we add it together. The same applies with the debit side. If there's nothing on the debit side, we just draw a line and we add it together. As soon as we've got figures or entries on the debit and the credit side, then we need to balance and total it. I hope that you have a better understanding of the general ledger, and the focus was only on the service business. The last chapter, we're going to look at the trial balance, which is the next step in the accounting cycle. And again, the focus only now is on a service business, and then we'll move on to a trading business. I hope you have a wonderful day. I want to leave you with this quote: success is not a good teacher. Failure makes you humble.